Hey everybody, Russ Silver here with Cardinal Financial, and today I am lucky enough to have my very good friend, Frank Capobianco, who is the Senior Vice President here at Cardinal Financial, and Frank and I go back a long way.
Yeah, I don't know if you're so lucky to have me here, Russ. We've worked together for a long time, Russ and I. Had a lot of fun in this business. Russ has taught me some things. Hopefully I've taught you some as well, but
Absolutely.
I think I still owe him some, so he asked me to come on the show today and I'm here.
So you remember when we first got into the business, and this was going back like early 2000s, we would have that ad placed in the New York Post, Daily News, Newsday, whatever it was, and you would just sit there and pray that the phone would ring.
Well, the problem is the phone would ring, but it would ring for one day, a ton of times,
right,
and then maybe a little bit the next day, and then nothing until the next week when it came back. Right. So you had to get all those borrowers on the phone, you had to get all those loans ready, and then prepare for the next rush.
Right, and they'd be calling every ad in the paper. You know, our ad may say, borrow $50,000 and have a payment of X. And then the next guy would have an ad say, borrow $75,000 and have a payment which was similar to our payment. And you never knew what was going on. And these borrowers, they just were calling.
Yeah, so it was, you had to be educational about it, but there was a real sales technique, which is where I think, we were able to learn kind of trial by fire,
sure,
those days the hard way.
Absolutely.
But I think the industry has cleaned itself up a lot. I think the delivery method to get in touch with the borrowers has cleaned itself up a lot. I mean, social media has been great. Yeah,
it's amazing the difference when you look at what we were doing in early 2000s to today, 2023. The changes are, 180 degrees, where, like Frank said, social media, I never thought I'd be doing this stuff.
Well, think about it. If you put an ad out in the paper on a Tuesday and something crazy happens with the rates, good or bad, I mean, maybe rates go up a point, maybe they go down a point, there's fluctuations all the time. You only had that one ad. So for a whole week, you might have had a rate that was not in the market, either for the better or for the worse, and you had to constantly explain that. So that was rough.
Right, that was absolutely a challenge. And again, some things changed, right? But some things stay the same, where it's really important. You have to be honest with your borrowers and also explain to them what's going on. Because most people, when you look at an ad in the paper, you see something, you expect exactly that. And sometimes it was, and sometimes it may not be.
Like the coupons?
With the coupons, exactly.
We used to have coupons, pick your payment, right? And then the borrowers would clip out their coupon, bring them to Russ and say, this is the payment that I wanted. And then we'd have to figure out just how much cash and what rate would go with that. And There was definitely a challenge.
Yeah, it definitely was. And especially then we, went from doing the newspaper advertisements to doing, the internet leads. People were clicking based on what they saw on an ad online, which we may have put that ad together a couple days before, and now it was running and they're clicking on it, and things could have changed in that time.
Or, as the genius marketing minds will tell you, sometimes it's all about just getting the phone to ring. So how many times did you get someone on the phone and you think they're ready for a refinance and, hey, Mrs. Smith, how are you? I just got your application online, and she's looking for the free toaster. So you have to explain, well, you get the free toaster if you close, and she doesn't have a mortgage. So there was some craziness that went on with that stuff too.
Right, definitely saw a lot of that. And again, then you transition maybe into mailing out postcards and things like that. But again, here you're dealing with, the U.S. mail. We're putting a flyer, mailer together on Monday. By the time we get it back from the printer to go out, it's Friday. By the time the people get it, it's another week later.
Yeah.
So there could have been a lot of changes in that 2-week period.
And it's a disadvantage, to the borrowers, to the salespeople, to the companies in general. So I think what's gone on now with almost instantaneous contact, right, between Facebook, Twitter, Instagram, TikTok, all this kind of stuff. We are delivering news real time. In our case, it's mortgage news, right? The programs and products and rates that are available. But even the way we consume mass media today, presidential elections and emergencies, you're getting it quick. You're not waiting for the Pony Express to come.
I mean, the world has changed drastically.
From when you had hair. I mean, I've seen some pictures.
A full head of hair, so it's
I've never had hair.
It's slowly leaving, but trying to hang on to the little bit I got left. But yeah, I mean, it's changed so much, and everything is like instant gratification. How many people got that Newsday or whatever newspaper subscription to their house? Today, everything is online because you're getting a newspaper. By the time you pick up that newspaper in the morning, you already know everything because the night before it was all online or on the news, on TV. So that newspaper was already a lot of times old news. So yeah, things have definitely
Technology
changed
is a disruptor. I mean, that's really what we talk about every single day, and it's a testament. Russ, I joke around, Russ has been in the business since I was born. I think it's a year after. But to be able to still be effective in this business, have as many relationships, people that trust you on purchases and refinances, you couldn't do that without being adaptive to the technology that went along with it, right? So I remember when we used to have to punch holes in our files, literally stack the paperwork and walk it from desk to desk. That's how a loan was processed. I mean, you would have to bring the entire file to a processor. He or she would do their work. They would bring it to an underwriter, and they would throw it on the ground and say, "This is a piece of crap," and we'd pick it up and make it better.
Try to make it work, exactly. But yeah, that's what it was. It was a big pile of paper. Emailing the documents now is even becoming something where today the borrowers, with the software that we have, don't even have to send us an email or a fax of a document, where they can download it right into their own loan program, which is great. It's really changed a lot.
Change the game, speed, efficiency, everybody's on the same page with communication. Nothing gets lost in the shuffle, no pun intended. But it just makes the process seamless, and it takes a lot of bad actors out of the business. I think that we've known and competed against some unscrupulous activity back then, but the business has regulated itself, and I think this helps that. So guys like Russ that do good business and always have, it's really just, business as usual.
Yeah, no, listen, again, it's gotten better, and it's gotten easier for the clients, for that home buyer, where he's about to make the biggest purchase of his life, most likely.
And he's trusting Russ to do
it. A little scary. But, he's coming to us, and there has to be a real trust there. Now I'm telling him, okay, I need 10 different things. People start to panic. How am I going to get that bank statement from 2 months ago? Now they can go online and get that bank statement.
Well, and also what we've done with technology is we've been able to bring the cost down for the borrowers, because the way we used to resolve these issues in the old days was we hired someone to make copies. We hired someone to stack the files. We hired notaries to go to the borrower's house to pick up the documents so that they didn't get confused. All these things have a tremendous cost to them of human capital, salaries, payroll tax, benefits, all that kind of stuff. And now with the machine, with Octane, we can do all that stuff with a touch of a button, and that gets parlayed over to the borrower and lower costs and better rates. And
plus the borrower sees what's going on their loan. They're not getting a surprise phone call from, Joe the processor, 2 weeks after they started the loan with a list of 15 things that they need. Because that was always a really a pleasant phone call when they would call me after saying, "I don't understand. I started this 2 weeks ago, and now I need everything is right there. It's all very, out in the open. Nothing's being hidden. It makes it a lot easier process."
I think, honestly, though, from the mortgage, not the borrower side, it is great for them, but from the mortgage side, almost kind of takes the fun out of it. What do you do all day long now when you don't have to answer those silly questions, right? You're not getting calls from the borrower saying, "I thought you were going to send me disclosures 2 weeks ago and they've never got here." Now you got to go print up a whole new package and get it to mail.
Put it in the mail or whatever it is, or run to FedEx because they didn't get it. Like you said, they were expecting it 2 weeks ago. You had no idea if they got it or not. Now we click a button. They get it. When they finish their electronic signing, we get a note, an email or a message saying, "Your borrower, Joe Smith, just finished this." And then there's a list, get us this, this, and this. So it's a lot easier process for the banks, which this way the banks were able to save a lot of money and pass a lot of that savings on to the buyers or the borrowers if it's a refinance. And for everybody all around, it's a much better process.
Russell's handled a lot of my friends and family referrals that we've done throughout the years. Not only good service, 5-star ratings for Russ because of his personality, his high mortgage IQ, being able to answer any question that they don't know, but also just the smoothness of the process, right? So when you have that kind of comfort level, it's not like, I'm giving Frank the business because he's in the business. They're giving it to us because we actually can execute very well, smooth and quick.
We do a good job. And look, at the end of the day, there's nothing better than going to a closing and the buyers, the borrowers, are actually happy. They're not sitting there like, deers in the headlight where, what am I doing? What am I doing here?
Or ready to choke you.
Yeah, or ready to choke you, exactly. They knew from day one, this is what they were doing. They were able to follow the process. We were obviously there for them, at all times for phone calls, whether it's a weekend or whatever it is, we make ourselves available. But again, it's a great process. So when they're there, it's really a happy occasion, and then when they get those keys, and we try to attend closings. If they're local, we try to be there, which is great. It's a great moment for everybody, and especially that home buyer. It's super. And the agents see this, and that's why the agents will come back, right? They will refer stuff to us. The attorneys see this. They're the buyer's attorney, the seller's attorney. Everybody likes a smooth transaction.
So from 20 some odd years ago when you started, sounds like a lot of things have improved, a lot of things have gotten better, made your job, your life much easier. What are some of the things that you might miss from early 2000s mortgage banking?
It's definitely gotten tougher as far as, now you have to actually qualify for the loan, okay? The days of, somebody calling up and saying, this is what I do, this is what I make, and we'll say, okay, when do you want to close? And so, listen, some of them we were doing the appraisals, the appraisals weren't even back.
And you're closing the
closing, and we'd get stuff in that period where we're waiting,
And I think, the misconception is a lot of people think that, subprime and a lot of those programs are just like evil banks, evil loan officers, or even evil borrowers. We're just out there trying to rob money from the system. And don't get me wrong, there was some of that went on. But we see a lot today, and I think where you're going with this is like self-employed, own one or multiple businesses, own one or multiple properties, maybe not showing as much on the tax return as you may have. Good credit, good assets in the bank, good pay history, but tough to get those qualified. And I think you may be one of the only people that I know of anyway that knows of the programs where we still get those people qualified.
Yeah, there are programs out there, they call non-QM programs, and they're great programs for that self-employed borrower, but it's much cleaner. Now, they have to have good credit. There's a lot more involved. We're not just taking a phone call and telling them sign here and sign here and we'll figure it out after. It's a much more regulated process, but there are programs out there. People just have to take the time and reach out to us, and we'll try to get you into the best possible program that fits your situation. Not everybody fits into one box.
And I think that we do a good job at that. And one of the things that, I certainly miss about the business in the early 2000s or even, pre-COVID is being in the office with you guys. You probably have lost a lot of weight since I stopped ordering lunches. I think that was one of my favorite things to do as a manager is feed people, both, business and chicken parm.
A lot of chicken parm.
But, with all the remote stuff and whether it's work from home, which I clearly do. I mean, I did put on pants for this interview. Whether it's work from home or whether it's out with the agents or golfing, tennis, pickleball. Right. Big into pickleball now. Everyone's out and on the go, which is great because you get to have a life, you get to interact, you get to have some good referral relationships, but we spend a lot less time together. So to do something like this is always fun for me. We used to do this, 24/7. We lived in the office together. Right. So I do miss that. But other than that, I think it's been really great, and I'm glad that you brought me back in.
Listen, it's great having you here, and this has been a lot of fun. And like he says, the one thing that is the biggest thing that I miss. We had an unbelievable group, and a lot of our group is still together, which is kind of amazing in this business to have some of our core guys all still together, which is incredible.
Almost over 20 years, some of us.
Yeah, and it's really amazing. And we must be doing something right because we're still here, and a lot of guys are not. So again, thanks for coming in, Frank. I love it. I appreciate it. Let's make 23 a great year.
Let's go. Thanks for having me on, man. Always great to see you.
Absolutely.
See you soon. Later.
Thanks, guys.